We're taking a look at the currency market now with Shireen Darmalingham, Macroeconomic Strategist at Standard Bank. Thanks so much, Shireen, for joining us this morning. Well, of course, yesterday all eyes were on the mini budget and the kind of commentary we were going to get from the Finance Minister, Praveen Gordhan. Of course, that having come and gone, what's stood out for you in particular? Because one of the things that would affect the currency market specifically is that government's not thinking about using reserves to manipulate its value.
Indeed, yesterday the rand did weaken on the back of the MTBPS and the National Treasury's less favourable outlook for the domestic economy. We also, as you mentioned, there were suggestions that the SARB's reserve accumulation could taper over the coming months in order to use government's cash balances to plug both the domestic and international funding gaps, which are generally caused by reduced revenue collections. And if we do see this reduced reserve accumulation over the coming months, we could see an increase in rand volatility over the medium term. The less favourable outlook was also shaped by a lower GDP forecast, a wider budget deficit, as well as the less favourable current account position that we saw. So we could see market participants spend the next couple of days or even weeks really digesting the implications of the MTBPS and really adjusting their portfolios accordingly.
Overall, we've had Treasury say that South Africa's rand is expected to stabilise at stronger levels than seen at present. We're currently trading at 7.94, thereabouts, to the greenback. To what extent is there consensus on that kind of commentary from your end?
Well, we believe that we are firmly on track to see the rand at about 8.20 towards the end of the year. Given obviously the risk, if we see a risk on environment, we could see the rand strengthen. And if we do see the comments out of the EU summit later today being more, improve international sentiment, we could see that risk on environment really help the rand to strengthen. However, we do believe that sentiment is likely to be more tainted by disappointing resolutions coming out later today, and we could see that the rand in the short term could possibly weaken. So we do believe that the rand is on track for a level of about 8.20 by year end.
Many expecting to see out of that EU summit today broad agreement that lacks detail still. Shireen, what do you have on the cards? What are you anticipating?
Indeed, that lack of conviction of the resolution is really what we are what we're expecting. If we did not see the meeting being cancelled yesterday, it was really an indication that there are some loopholes in the plans, and that if they did have a firm conviction of what they're likely to do to help Greece and the rest of the Eurozone come out of the crisis that we're seeing, we could obviously have seen some further. Well, I'm getting a bit tongue-tied here, but we could see some further resolutions come through, but we're not really seeing that. Over the past couple of weeks, we have been seeing that lack of resolutions, and it's not really painting a very favourable picture for the Eurozone and the crisis going forward.
With that, and within that context, we've had our own growth being revised downwards to 3.1%, and many still asking, yes, we've seen that dose of realism emerge, but to what extent is the Finance Minister just a little too optimistic still?
I do believe that that number is a bit optimistic. Standard Bank's expecting growth of about 3.1%, and the risks are really to the downside. If you look at yesterday's data, for instance, the leading indicator which came out for August, we saw that number decline to about 130 points, 130.7 points from 133.5 points. And if you look at the detail of that number, you can see that there were about 10 of the subcomponents which really showed a slippage during the month, and was only really the export commodity price index which really showed an improvement. So there is some concern that going forward that we could see that number coming slightly lower. In fact, the unemployment data as well, the employment situation in South Africa, we have been seeing fairly shabby job increases. So we could see that also pressuring that GDP number much lower than the 3.1% that we also even in pricing in. So there are downside risks to that growth data.
Shireen, let's leave it there. Thanks so much for your time this morning. Shireen Darmalingham is Macroeconomic Strategist over at Standard Bank.